Hey guys, you've joined us on Commodity Classroom and the topic today is crude oil, which touches all of our lives and on daily basis. Crude oil is used to make petroleum products that we use to fuel cars, trucks, airplanes, etc. It is also in the fuel and form of finished goods like fertilizers, clothes, rubber, plastic and metals to mold and shape them. And India imports more than 80% of its requirement of crude oil, so the international demand, supply, policies matter to us and to our import bill and economy in return. The world oil market is complex. Governments and private companies play various roles in moving crude oil from producers to consumers. There are about 100 countries that produce crude oil. However, 5 countries accounted for about 51% of the world's oil production. US has come to be the largest producer of crude oil with nearly 15% in world share. The Persian Gulf countries produce about 30% of total world crude oil. But it is the OPEC, or Organization of Petroleum Exporting Countries, as a group that includes some of the world's most oil-rich countries, which hold near 80% of world's total proven oil reserves. OPEC was formed in 1960s in Baghdad by Iraq, Iran, Kuwait, Saudi Arabia and Venezuela with the aim to regulate global oil prices by coordinating on reductions or increase in production and a fair return on capital to those who are investing in the industry. OPEC currently has 13 members. The 5 founding members have been joined by Algeria, Angola, Congo, Equatorial Guinea, Gabon, Libya, Nigeria and UAE. It headquarters in the Vienna. In 2016, OPEC Plus came into existence with another 10 major oil-producing countries joining in, which include Russia, Kazakhstan, Azerbaijan, Mexico and Oman as top countries. The move to create OPEC Plus was a response in falling crude oil prices, partly caused by a huge increase in US shale oil production since 2011. The OPEC member states produce 40% of world oil. Exports make up to 60% of global petroleum trade, and as said, the member countries account for 80% for world proven oil reserves. Out of these, Venezuela holds 24.5%, Saudi Arabia 21.5%, Iran at 16.8%, Iraq at 11.7%, UAE 8.9%, Kuwait 8.2%, Libya holds 3.9%, while Nigeria holds 3% of overall oil reserves, and so on. The OPEC decisions on output and exports influence the global prices. The OPEC members meet regularly, almost every month, to coordinate on how much crude oil to sell collectively in the global markets. While the crude prices have been known to rise or change the course of economies, the most prominent ones were in 1973 when Arab imposed embargo on US and other countries, leading to prices quadruple within the 3 months. The Iran-Iraq war in the 1980s, the Gulf War of 1990-91, and then the 1997 Asian financial crisis, and then the 2007 and 8 global financial crisis have all led to high move in crude prices. A very prominent move in crude came recently when the demand and prices collapsed due to COVID lockdowns, China economic slowdown, and the US production doubling, and also the higher output from OPEC members, taking the prices into a negative in mid-2020, a first in the history. Following which, the OPEC Plus members slashed production by 10% of global production to keep the prices supported, exhibiting the global ability to affect prices and the global economy. So while the oil cartel seems to be proving its ability to move markets, would be interesting to see on how and what change in role they would play as the world moves towards energy transition.